Hello and welcome to our webcast, the Inflation Reduction Act, Benefits for Tribes. We're pleased that you've joined us today. And before we begin, I'm going to play our housekeeping video.
Welcome, and thank you for viewing our webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, we have a great lineup of speakers who will be sharing their insights and expertise on this important subject. To kick us off, I'm going to hand it off to today's moderator, Anita Shah, partner here at Moss Adams. Anita?
Thank you. As Amy mentioned, I'm Anita Shah. I'm a partner at Moss Adams, have been working with tribal governments for over 15 years now, and I'm very excited to have these very knowledgeable speakers with us. I'll let them introduce themselves. Starting out with Craig.
Hi, good morning or afternoon. I'm Craig Lammlin. I'm a tax director located in Dallas, Texas. I've worked in credits and incentives for 20 years. Very excited to speak about these opportunities for tribes, which is, we'll learn, are very unique and the reason we're all here together today. I guess on to Shannon.
Thank you, Craig. My name is Shannon Ward. I'm the Chief Lending Officer and Senior Vice President at Native American Bank. I have been with the bank about 7 years this time. I've spent the bulk of my career working in the finance-related fields, and I've really specialized in providing access to capital to tribes and tribal enterprises for about the last 12 years of my career. It's a pleasure to be here today. Thank you.
I guess I'm next. I'm Ben Alderton. I'm a senior manager here at Moss Adams. I'm in the credits and incentives group, specialized in both new markets tax credits and also Inflation Reduction Act work that we're going to talk about today. So with that, get started.
Thank you. So just to start out, Craig, maybe you can start out with giving us an overview of the Inflation Reduction Act or IRA to kind of tell us, how does this impact tribal governments and tribal businesses?
Sure, and that's a great place to start, which is why do we care about this? Because typically when we talk about credits, you know, our audience may turn around and say, well, that's great, but we don't pay tax. So keep that in mind, and let's just run through a couple key points. Inflation Reduction Act, which was passed at the end of 22, essentially has about $370 billion of incentives for clean energy investments. And depending upon some of the more recent articles that have been written, that could potentially be up to $2 trillion. What's really interesting about this program, unlike some of what we've seen in the past, is there's a 10-year life cycle for these programs. So we don't really view this necessarily as a, you know, annual, we're going to get one shot in the arm and that's it. This is going to be going on for over a decade. Now, why this matters to our audience, why tribes care about this, let me start at the bottom. This is not a grant program. There, with perhaps a very few exceptions, there isn't an application where you have to compete against other organizations to receive funds. This is a unique set of circumstances under the IRA where essentially if you do certain things as of right, you are entitled to certain economic benefits that in this particular case don't come to you in the form of a tax credit, although that's what we refer to it as. It comes to you in a method called direct pay. And direct pay is essentially that tax credit in the form of cash. So it's really a bit of a game changer. You know, a 6% credit may not be of any interest to anybody, but when you start to add in all the different things that Ben is going to talk about later in the program, all of a sudden the opportunity for this really becomes very significant. And part of this was when they wrote the IRA, there was a recognition that there were certain groups were not going to be able to share in some of the economic benefits and the environmental benefits of clean energy. So as a result of that, there was this incentivization that went on where tribes and Alaskan Native corporations are considered what are called applicable entities. And we'll talk about that in a little later. But it means for the programs we're talking about under the IRA, rather than receiving a credit that you can't put on a tax return that you're not filing, you're going to be able to receive direct pay from the federal government for these incentives. One thing I would note, though, about this, which is really interesting, because of the number of programs that are involved in the Inflation Reduction Act, the IRS has been providing written guidance as it relates to these different incentives and how you can achieve the benefits underneath them. One of the last provisions that we're still waiting for guidance on are the precise mechanics around direct pay. We have a general view into this, which we'll be talking about based off of our experience with other programs, but we're hoping in the next 30 or so days, the IRS is going to be providing an update as to how tribes are actually going to be able to monetize these benefits through the direct pay process. All right. So just one of our goals is, can you, or actually I'm going to walk you through what is the difference between an investment tax credit and a production tax credit. And these are really what we see a lot of programs that have value for tribes being broken into these two different groups. So one of the key factors here is it's really one or the other. You're not going to be able to have both benefits on the same property. So let's talk about an investment tax credit first, and then we'll talk about a production tax credit. There are advantages to each, and there are disadvantages to each. So with an investment tax credit, it's similar to the idea that you have a piece of property and you place it in service. And so we give examples of solar panels, or you build a biomass facility. Essentially, the credit is earned on the day that you place that property into service. The start of construction is relevant, and Ben will speak a little bit more about that as it relates to some of the enhancements. With an investment tax credit, there's a 5-year recapture. So you build that property, place it in service, but then you have to make sure that it's maintained and it remains in service for 5 years. Otherwise, the IRS can come back and recapture a proportionate amount of the property credit. There are certain instances when tax-exempt bonds are used that allow them or result in a reduction of the benefit involved with the property. And then lastly, what's important about this is it can be owned or operated by different parties. And we'll see that this is a distinction compared to the production tax credit. So for a production tax credit, they're based on a number of things, which essentially allows for the manufactured product, an example of which would be electricity, renewable energy, or various renewable energy equipment. The credit is earned annually, and it's based on the production of the particular units. Again, the start of construction of the date is relevant. There's no recapture because in this particular instance, if you're producing the item that creates the credit, it's created and therefore produced. It's not subject to a reduction for certain tax-exempt ownership utilizing those bonds. In this case, though, that production item has to be sold to an unrelated third party. And the project itself has to be owned and operated by the same party. So it's an important consideration when we think through if you put, for instance, solar panels in service, are you owning them and selling the energy that you create to them to a third party, or are you selling it within the tribe, which may make it ineligible? The last thing I would note is that in 2025, there are some changes to both of these credits, and essentially they become technology neutral. So it's just a minor distinction, but something to take in place. So I think, Anita, you would wanted to interject just for a second.
Yeah, well, I have one question, Craig.
Sure.
Can a tribal government or tribal business take advantage of both of these tax credits, or do they have to pick one or the other?
So they can take. So yeah, and that's an important clarification. They can do both, but with when you look at a discrete project, it's generally going to be one of these benefits or another. So it's important that you model out which one the tribe would receive the best and greatest benefit from. So yeah, it's not that once you do one, you're locked into it, but you are for that particular project.
Okay. And then I think I accidentally skipped over the slide. Can you maybe speak a little bit to this one?
Oh, sure. So one of the things that we've noticed when we speak to tribes is the need for economic diversification. And I think that that's one of the really big selling points of the Inflation Reduction Act. You have all sorts of different opportunities, and we have them all listed out on this particular slide that you may be able to benefit from, whether it's solar energy, wind energy, geothermal, whether or not you want to do battery storage, which is really becoming a huge opportunity. If the tribe wants to put in a qualified biogas property, get involved in building and constructing microgrid systems, generating clean hydrogen. Carbon sequestration is a unique animal that probably deserves its own presentation. But when we get down to things like advanced manufacturing or utilizing commercial electric vehicles, there are significant benefits. Even if you're just putting in charging stations for electric vehicles, there can be big items. One thing, interestingly enough, the CHIPS Act deals with semiconductor companies and the production of semiconductors domestically within the US, passed right before the IRA. But we mention it because it's a unique and discrete opportunity that tribes could take advantage of that could allow them to diversify their economic base, have manufacturing jobs, build any number of these particular types of technologies, and employ members of the tribe and receive these benefits. It's really an extensive list.
Thank you. So, Craig, can you share a little bit about who is eligible to receive those direct pay provisions and what technologies would qualify?
Sure. So when we look at direct pay, there were a group of entities that were all put together. We have tax exempt entities, states, local government communities, things of that nature, Tennessee Valley Authority. But for purposes of our conversation and probably this presentation, the ones that are most important, federally recognized tribes and Alaskan Native corporations. And so those are really the key groups that we're looking at. And then lastly, we've got cooperatives engaged in furnishing electricity to people that are in rural parts of the country. And while there's a whole bunch of credits that are available specifically to these applicable entities through direct pay, there are three programs that we mentioned down below, and I'll just mention them briefly: 45V, 45Q, and 45X, that are available to all taxpayers. You could be a Fortune 50 company, you could receive direct pay for doing these programs. That being said, for the entities that we're talking about now, for tribes, for Alaskan Native corporations, while some of these programs may also be available to transfer, because of the fact that you would fall within applicable entities, you have to take them as direct pay. So that's a consideration. You're not going to be able to take these and transfer them to a third party and sell them for cash. You will receive the full value of those benefits through direct pay.
So I'm going to put the panelists on the spot for a second. There are a couple questions that came in, and if you can answer them, that would be great. Or if IRS hasn't issued guidance on it, we'll just hold off and circle back. So one of the questions was about, can you use these tax credits to move from solar to green hydrogen to green ammonia production?
When we say from, I guess I'm not sure about that, because certainly solar would qualify, hydrogen would qualify. I'd have to look into ammonia, but at least two of those do.
All right. And then I know this question has come up before, and I don't know if we have an answer to this at this point, but can these credits be used if the project is paid for by a grant, by a federal grant?
This is a great question. We've spent some time looking at this, and our perspective is this. So let's assume you have a $100 project. You receive a $60 grant. The question is, do you get a credit on the full $100, or do you get it on the $40 that is just what you put in yourselves? And our general view is the qualified basis of the property, which might be that $100, is reduced by the dollar amount of the grant. So our view is, absent there being some guidance that comes down the road later that would change this, that $100 project with a $60 grant, you would only be able to receive a credit, which is eligible for direct pay on the $40.
And if IRS does come out with guidance, normally with the grant, if you're applying a credit to a grant, then you have to use that credit for the specific grant requirements. So you have to follow, you have to use that money that you saved then for the provision of the grant. But we'll definitely share more information as we get more guidance from the IRS and other agencies.
And so what we have here is a listing of the more significant programs in the IRA by their code section, the sort of technology that is involved in them that you would be able to obtain a benefit from. And then what Ben is going to be talking about is enhancements that are related to these different programs. And they'll explain all of that and how that can increase the credit percentage. And then ultimately speaking, whether or not, and in this case for all of them, they are eligible for direct pay. So with that, I think.
Anita, before we move into this section, I wanted to interject a little bit here and maybe bring Shannon into this conversation a little bit as well, because one of the other questions that we often get with respect to direct pay, we don't know what the guidance is going to say, but if you can't monetize the credit, there might be a period of time where you're actually building the facility, if you're building a solar field or whatever you're building, that would qualify for the credit. And then we don't know yet what it's going to look like to apply for that payment, but there's going to be a lag that exists. And so what do you do kind of in the middle? And one of the areas that I wanted to ask Shannon about was, how are you looking at it from a bank financing standpoint? There's some gap financing opportunities, those kinds of things that exist.
Sure. And thank you for the question. I think that is probably one of the bigger, so everybody is waiting on more guidance to come out, right? We're all waiting to see how this is actually going to be implemented. And I think that if you are pursuing a project that will be eligible for some level of direct pay credits, you may not have to actually wait for that guidance to come out before securing financing for the project. So the way that Native American Bank really sees our organization playing a significant role in the deployment of the direct pay is providing bridge financing. I mean, if we can qualify a project without the direct pay, we can provide the bridge financing for the total project costs. And then after that compliance period, because we're still waiting on more guidance about what that compliance period is going to look like and when the actual direct pay component will come in, the bridge financing would provide, the upfront funds to finance a project. And then as the direct pay is issued, that would be utilized to pay down on the outstanding financing. So that's really how we see the bank playing an important role as tribes are pursuing their projects that are eligible under the direct pay with the IRA. Thank you for that question.
That's great to hear. So maybe Ben, you can tell us, Craig mentioned the tax credits and direct pay, but there are also credit enhancements as well. So how does a project qualify for the enhancements and how are they generated?
Yeah, so let's first talk about how the enhancements are generated. And it's important to note that the base credit, if you look at the code, the base credit is a 6% credit. And the way you then enhance that and to get something that's much more meaningful is to meet the various tax credit enhancements. The first one and the most common one that's talked about is the prevailing wage and apprenticeship requirements. And it's essentially that the laborers and mechanics are paid a prevailing wage, and they also meet applicable apprenticeship requirements that are kind of listed there in the middle of that slide of 10%, 12.5%, it ramps up to 15%. And the code does provide for a correction and a penalty provision should you actually inadvertently don't pay prevailing wage on a project. You can go back and correct that. At some point in the future, there is a penalty provision, so you're enticed to make that correction earlier rather than later, for sure. There's a question that has come up in my mind as I think about tribal entities in particular, is that many tribes also have their own prevailing wage and apprenticeship laws that exist as well. There's no clear reference in the statute if a tribe's prevailing wage, say, is higher or greater than the Secretary of Labor's requirements. I think in order to meet the prevailing wage and apprenticeship requirements, you need to meet what the Secretary of Labor prescribes as it's currently drafted. Again, there might be more guidance, and I hope there is. But if the tribe prevailing wages may be higher, maybe your contractor is in default with the tribe, but you are at least qualifying under that prevailing wage. It's kind of an interesting area where we do need some additional guidance. There's an important exemption that exists for the prevailing wage and apprenticeship, and that's for projects of less than 1 megawatt, or those that began construction within 60 days after the Treasury published the first regulations. If you began construction by the end of January 2023, you need to meet prevailing wage and apprenticeship requirements, or if your project is less than 1 megawatt, you're exempt in that situation. And I've looked at what's 1 megawatt look like, and 1 megawatt, I've seen estimates where it's about 6 to 8 acres of solar panels. So it's a pretty good size project. It's 1 megawatt. So you're not talking about your typical rooftop solar array. So those projects would automatically be exempt. And that bonus is, we'll talk about in a minute, gets you from that 6% up to 30%. So it's a big jump and a big important piece of it. The next is domestic content. And basically, this is a Buy America provision, and it's a 10% enhancement as well. And it's interesting with respect to direct pay that the bonus actually gets reduced from 90%, goes to 90% in 2024, all the way down in 2026 if you don't meet domestic content and you're doing direct pay, the applicable percentage is 0. You actually have to meet direct domestic content under the regulations, or get an exemption for that. There is an exemption provision that does exist in there as well. But that's an extra 10% that can be added on to the project in terms of the bonus. And then the next one that we'll talk about is the energy communities. And so this is another 10% addition. There's 3 ways that you can qualify as an energy community. The first way is that if you're building within a brownfield site, and that can be a federally or tribally designated brownfield, or there's been a phase 2 site assessment that shows there's a hazardous substance that exists, or even if it's a smaller facility, there's the phase 1 ESA has been completed. And so that's the brownfield category, and if you're in that, meet that, it's a 10% bonus. The other one is based on location. The other 2 is actually based on location. The first one is what we call the statistical area, which is based on the metropolitan statistical area or the non-metropolitan statistical area, depending on where the project is located. And the first way is that there's a fossil fuel employment of greater than 0.17% within that MSA, or tax revenues based on fossil fuel production is greater than 25%. And importantly, there has to be the MSA has to have an unemployment rate at or above the national average for the previous year. And That's actually going to change from year to year, that unemployment rate. The IRS has indicated that that usually comes out in April of every year, the unemployment rate for a specific MSA. And then it's expected that you will then have to meet that for that coming year. So each April, there's going to be a new rollout of what is the unemployment rate. It's an important safe harbor that we'll get to in a second that exists, but it's important that you actually have to meet both of those, so fossil fuel employment or fuel tax revenue and the unemployment rate. So then the third energy community way to qualify is if there was a coal mine or a coal-fired electric generating unit in the census tract, or you're in an adjoining census tract to those, and those have closed. The Department of Energy has actually released a map. You can go out and map the census tracts related to coal closure categories today. The unemployment rate is supposed to be updated in May. They're expecting to get the updates for the unemployment rates to be updated, so you'll be able to look at what the statistical area category is. Importantly, it doesn't map brownfields. There's other mapping tools that you can utilize for brownfields, but at least it does provide a mapping tool for at least those other two categories. And then this safe harbor is very important that exists. If a project is located in an energy community when it begins construction, and there's some terminology and some requirements to meet the definition of beginning construction. But if you begin construction in an energy community, it's deemed to remain in an energy community for the remainder of the credit period, which would be very important for areas maybe where the unemployment rate would shift over time. And this last one here is another way to get another 10 or even 20% bonus. As Craig mentioned early on, he said this isn't a grant, this isn't an application. But he said there is an exception or two that exists. And this is the one exception where you do actually have to make an application. And that is what's called the environmental justice allocation. It's designed to increase access to low-income communities or communities that just otherwise have not benefited from the green energy technologies and green energy revolution. And so in this situation, you can fall into one of four different categories. One is your project is located in a low-income community or tribal land. And if you apply for and receive an allocation, that's a 10% bonus just based on that location. If that is associated, if your project is associated with affordable housing, or the benefit that's associated with the green energy goes to traditionally low-income persons, you can actually qualify for up to an additional 20% enhancement. And so these are for smaller projects, less than 5 megawatts, and the allocation is 1.8 gigawatts per year. The guidance that's been issued so far lists this capacity that's out there. They're estimating that about 200 megawatts of the 1.8 gigawatts is going to be allocated specifically only to tribal land. But if you are on tribal land and then also the financial benefit is going to low-income persons, you put yourself into category 4 there, and you're in that 700 megawatt allocation that exists. And what's important is you must apply for and receive an allocation before your project is placed in service. And so it's actually created a bit of an interesting scenario where projects were maybe even holding off to see if they can apply for and receive these allocations, because it is such a 20% bonus, could be quite substantial, obviously. And then there's going to be additional guidance that's released as we move forward there.
Thanks, Ben. I just want to, I think Craig had a comment on prevailing wage.
Yeah, and I apologize to take us back to the very beginning of all of these enhancements. When we look at these enhancements, I'll make maybe a couple observations about this. And I think Ben is correct in his comments that it's unclear whether or not a tribe's prevailing wage will be able to be the one that is used for purposes of that benefit. Interestingly enough, there is an email that you can check your prevailing wage on sam.gov, which is the federal website based on your location and job type. But there is also an email that is available to reach out and ask the federal government or the Department of Labor, specifically for a determination on your job type and location for prevailing wage. I have reached out to them about this very question. They have not replied back, and that was about 2 months ago. And the email for anyone who is interested is iraprevailingwage@dol.gov. So it's an important thing to consider as you're beginning these projects, to have that in place in your contracts so that you can ensure as you're working through, placing the project in service and you're documenting all of the wages. Because this is the prevailing wage is based on Davis-Bacon, when you look at the requirements that we've traditionally seen to be able to provide the documentation to show that you meet those requirements, they're pretty extensive. We don't feel at this point that the IRS, and again, absent there being some type of guidance that comes out, is necessarily going to accept the summation that all of the carpenters or electricians got paid prevailing wage. We think that we're going to have to produce reports that would show the individuals that were involved in a project on an almost line-by-line basis to prove out that they do meet prevailing wage during the term of the contract. So getting this all done contemporaneously with the construction of the project is going to be very important if you don't fit into one of those exemptions.
Thank you, Craig. And then one question from the audience about, can a project qualify for tax credits or direct pay if the project combines hydrological and solar energy production?
My thinking on that would be that to the extent that there is solar energy, yes, that the solar piece of that would qualify.
Thank you.
So this slide here is just showing a pictorial of how do you get from point A to point B based on your various tax credit enhancements that you might qualify for. And so you can see down there at the bottom, you start out with that base credit of 6%, and we multiply up to 30% by the prevailing wage and apprenticeship or an exemption that might exist, that important exemption that we're talking about. And then as we kind of add and layer things on, the intent seems to be that we can just keep layering on top of each one of these, all the way up to if you've got a project that is located on tribal land and benefiting the low-income persons, or is associated with an affordable housing development associated with it, you might all qualify all the way up to 70% of your costs being eligible for that direct pay reimbursement. So it could be quite valuable as you kind of move from one layer to the next as we work our way up to chain. And this is based on ITCs. It's in and of itself. The next slide talks about the different examples or different bonuses associated with the production tax credit. The environmental justice, piece of it, and goes away here. So you end up with that going up to basically a 50% bonus when you, or 50% bonus when you move up to the chain here. So definitely a benefit to meeting each of those different enhancements.
And I'm just gonna, if you don't mind, I'm jumping in here for just a moment.
Yes, please.
So as you're looking at these two slides, so if you're working for your tribe, considering pursuing financing or pursuing a project that's going to utilize all of these direct pay and credit enhancements, you can see, it is possible that you could have up to 70% of your project costs paid for in some manner. The direct pay is going to come in over time. It is not an upfront direct pay. So you will actually have to construct or build the project. And then these credits are going to come in after the fact. So when I spoke before about bridge financing, you would have your total project costs that will need to be paid for upfront. But you can see as you start to layer on all these different provisions that, a significant portion of the total project costs can be effectively reimbursed to you. So you will have to bridge that. So that is a place where Native American Bank can assist in providing that, what we would consider to be bridge financing. There's also going to be a gap. So even if you take advantage of every single credit that's available, there is still up to, well, at a minimum, 30% of your project costs that will be paid for out of pocket. Now, if you're in a position that you have the equity or the capital to be able to put into the project, that's fantastic. But if you don't, the way that I see Native American Bank playing a significant role with the IRA is that we can bridge the financing upfront, and then as the credits are coming in and your project is seeing the net effect of that, there's still going to be a portion, the 30%, up to 30% or more, that would be long-term financing. And Native American Bank is positioned well to provide that type of financing just based on the nature of our organization. I did want to also state, as you're hearing about all of these provisions under the IRA, it's a little bit overwhelming. I mean, I think that as we're stacking all of these things, that it can be quite confusing. I think that one of the, if you're getting bank financing or not, it's very, very important to have support that can help assure that your project complies with all of the provisions under each of these tax credits. You would not want to not be eligible for one of these enhancements simply because you were either unaware or did not have strong compliance support to assist you in taking full advantage of each of these provisions. But for any person that has tried to pursue financing on a renewable energy project, you know that the economics of the project are difficult because, you know, tribes are not taxable entities, so they have not been able to take advantage of these tax credits. And so the provisions that allow the direct pay in the IRA are going to make a profound difference in what is the types of projects that are economical for tribes. So I really want to reinforce that, that this is not something that should be overlooked. It's also not something that should be considered to be too compliance heavy to pursue, because you can see here, it will have a huge impact on what types of projects make sense for a tribe to pursue.
That's a really good point, Shannon. I imagine that even for a for a general manager or tribal administrator to take this project to in front of tribal council or tribal boards, they would have to lay out how they could actually qualify. They'd have to show the documentation to prove that this would be a worthwhile project to pursue. Obviously.
And I would just, I don't want to, I'm sorry, Anita, I don't mean to interrupt you,
please,
but I do just want to call attention to the fact that if you do need to pursue financing, either for the bridge or for that gap piece that ends after all the enhancements come in, any financer, any lender is likely to want to know that you are able to meet the compliance requirements of all of the provisions. So I just want to really encourage anybody that's considering using these direct pay and these credit enhancements to be sure that you have support from the compliance end of things. Thank you.
To add on to that, because I thought you made a really good point about your compliance aspects of this, but it should not be a deterrent. I know that we have looked into automated solutions for a number of these issues, and we're working on a number of those, and I'm sure other great firms out there are doing so as well. So it needs to be done, but I don't think anybody should necessarily in the audience feel this burden would fall on them. There are people that are looking into these issues to make sure you can qualify. You just need to be aware of them to make sure you get it taken care of.
Good points. And then a good question came up in the audience. Do these credits have an end date, or does a project have to be completed by a certain date to qualify for these credits? So
the Inflation Reduction Act provides for basically a 10-year window for these credits to continue to flow. So to the extent that a project doesn't fall within that, doesn't place in service within that 10-year window, I think then you would be sort of out of luck, for a better way of putting it. But definitely would have the ability to, you do have a lot of runway, so you've got time to do your planning and to make sure that you're meeting all the requirements that everyone is talking about, for sure.
You know, Ben, to that point, I'd throw on two other points to that, which is one, a lot of the programs we're looking at have been around for a while. They have been enhanced by everything you have discussed. I think for those of us that, have been in the tax world for a while, once something gets in the code, killing it off can be hard. And so, everything you said is right. It's got a 10-year life, which is great. But beyond that, I wouldn't want to be planning for year 11, but one never knows where things go. The other comment, which sort of dovetails into that, is, well, what if there's a change in administration or in Congress? I think when we look at these and you think about timing of elections, how long it takes to get legislation passed, I don't think anybody has any necessary concerns that anything, at least for the next 3 years, for any of this is likely to change. And I think particularly when you look at some of the discussion that we've seen, Manchin talking about some of the commercial vehicles and the requirements for those, it's not necessarily that the program would be terminated, it's that they may choose to tweak it. And a lot of the guidance we've received so far is a good, healthy start directionally, but we're still going to need a lot more information from the IRS over the course of this 10 years to really understand how all these programs operate.
Great comments and questions. I'm going to move the slide over to the next one.
Yeah, so this is an example of what are the benefits. This would be hypothetical examples of what can tribe or tribal entity realize, and what sort of enhancements can we look at. And so if we take this first project here, this rooftop solar that's associated with an affordable housing development, and we assume $5 million in qualified costs. If you meet all of the enhancements, you've met prevailing wage, you meet domestic content, energy, community, and it's associated with affordable housing, and you've been awarded that environmental justice allocation associated with it, you're looking at that 70% direct pay benefit and looking at $3.5 million coming back in that Shannon was talking about, that gives you that opportunity that maybe you really only have to worry about long-term financing, maybe that $1.5 million in that situation. You have to bridge, obviously, as Shannon pointed out. You do have to pay the $5 million out the door in order to get the 3.5 back, but it is at least an opportunity that exists there. And then if you take a bigger project, let's take a $20 million microgrid battery storage project that's interconnected and all these other things, but it's not associated with that affordable housing. But if you meet prevailing wage and domestic content and energy community, all of those, you get to that 50% direct pay benefit, you're going to get $10 million back in terms of that financing. So it's a significant, it fills a significant hole in a significant funding gap that didn't exist before, when it was a credit that tribes couldn't take advantage of at all because it was a complete utter tax credit that did absolutely no good against taxes you didn't pay. So.
I love this slide because this is, it's a really good example. A lot of tribal housing could use rooftop solar panels, and also for tribal governments that are in a position to invest in, to diversify their economic development. These are microgrid, battery storage, interconnection is an amazing idea. And these numbers are, you can present them to tribal council and tribal boards a little bit more because this gives actual examples.
I was just going to jump in, Anita, and mention that I'm actually at a tribal housing conference right now. And this is the provisions related to the Inflation Reduction Act. I mean, it is a primary topic that is being discussed here on several different breakout sessions. And it really is, we spend a lot of time talking about the economics of how all these credit enhancements come in, but we talk about doing some rooftop solar. on housing development by tribes. It's not just that this is starting to make more economical sense, but this does become more of a topic of sovereignty and sustainability. And I mean, while we've spent a lot of time talking about the economic impacts of what the provisions allow for, this really is promoting tribal sovereignty and sustainability. So it would behoove any tribe to really consider what kind of opportunities this legislation puts forward.
I think that's a wonderful point, just a direct impact to the members of the tribe, to the people, boots on the ground sort of thing. Where are you at on the impact that it could potentially provide? Because it does provide, and we spent a lot of time talking about solar or maybe even wind or energy production, and that's one way to diversify. But there are other opportunities that exist that if perhaps a tribe wants to look at putting in a advanced manufacturing project, and that's going to generate it's going to not only generate significant economic benefit to the tribe, but also employment opportunities and other things that are completely outside of the fact that you're getting that economic benefit associated with it.
Cool. Well, Ben and Craig, do you have any final thoughts before I turn it over to Shannon and thank her for joining us?
Just that there's no, go ahead, Ben.
I was going to say I do not. So.
Just that there's a lot more to come, and we look forward to continuing the conversation. This is just the start of it. I think those final comments by Ben and Shannon were really, really very good, and look forward to speaking to you again on this.
Thank you. Shannon, thank you so much for being our guest speaker and joining us for this webinar. I'm going to let you take it over from here to share a little bit about Native American Bank.
Sure, thank you so much. And it's really a pleasure to participate on the panel. I will just reiterate that the provisions in the IRA are they're transformational for a lot of the projects that tribes might be pursuing. Native American Bank, I'll just briefly touch on my organization if you're not unfamiliar. We are a nationally chartered bank that's headquartered in Denver, Colorado. The bank was started 22 years ago with the specific intent to overcome traditional hurdles that tribes experience as they're trying to, do any sort of economic or community development that's on reservations. And so the bank really is focused on that particular mission and promoting economic development on reservations. The bank, we are nationally chartered, so we're able to provide access to capital throughout the country. As our name would imply, we have a specific mission. And I would say that presently about 90% of our loan portfolio is made to tribes, tribal enterprises, individual small business owners that are located on reservations. So when I say that we're mission focused, it is truly mission focused. This is what we do. And we are, we provide access to capital to any creditworthy borrower, but really where our expertise lies is in providing access to capital for tribes and tribal enterprises. So it's just really an honor to have the opportunity to talk about the bank, also to participate in this panel. And we're just really very, very excited about the legislation itself. And then, of course, the guidance that we're all anxiously awaiting to really start to deploy these projects and get them off the ground. So thank you very much. And with that, I will hand off to Amy.
All right, thank you, Shannon, and thank you, Anita, Craig, and Ben, all of you for a really great discussion today. And we also want to thank our audience for being engaged and submitting your questions to help guide today's conversation. If you have further questions or comments, please reach out to us and we'd be happy to continue this conversation. We invite you to visit our website for more resources and information on this topic, many of which are linked in your handouts window. And next week, on May 17th, we have our Tribal Broadband Connectivity Program webcast, and the link to register for that is in the upper right-hand corner of your console, so check that out. And finally, here's a link to an online survey for today's presentation. And thank you for joining us. Take care, everyone.